at our webcast. Now, I would like to invite to the stage Vakhtang Butsrikidze, CEO of TBC Bank.
Ana, es როგორ ირთვება? Ladies and gentlemen, our team is very excited to be hosting Capital Markets Day in Samarkand. I'd like to thank you, Government of Uzbekistan, for giving us the opportunity to be part of this forum. I'd like to especially thank the Deputy Prime Minister of Uzbekistan, Aziz Abduhakimov, and Zura Polelikashvili, the Secretary General of the World Tourism Organization, to being with us today. We will also have a special guest, the Governor of the National Bank of Georgia, Mr. Kobagwenetadze, who will provide an overview of the banking sector in Georgia. I'd like to thank him for joining us today. Today's agenda is packed with interesting topics that will give us an overview of who we are today and where we want to be in the medium term. After my presentation, Nika Kurdiani, please, will present our Uzbek operations. Next, our CFO, Georgi Megrelishvili, will present our third quarter and 9 months financial results, which have been published this morning. Afterwards, we'll have a Q&A session followed by a short coffee break around 4 p.m. local time. Next will be our CIO, Bidzina Matsaberidze. Next will be CEO of our digital ecosystem, TNET, George Chumashvili. Next, Tornike Gogichaishvili, who will provide an overview of retail, MSME, and payment businesses in Georgia. Afterwards, Goga Tchelidze will cover CIB and wealth management. And the last two presentations of today's event will be made by our CRO, Nino Masurashvili, and our Chief Economist, Oten Nadaraya. And finally, we will close today's event with our Q&A session. Now I'd like to invite Mr. Gwenetadze to the stage, please.
Thank you, Vakhtang. I want to thank for invitation at this event, and it's good opportunity for TBC Bank, for Georgian regulator as well, to talk about the banking sector in Georgia. I'll have myself timer here, 15 minutes, to make sure that I don't abuse my time. I hope that I will be able to manage it. Georgia, as you know, it's located in South Caucasus, and population is about 3.7 million. GDP in US dollars in 2021 is 18.7 billion. According to latest estimates and projections in 2022, there should be quite significant increase in nominal GDP. We expect something like $25 billion by the end of 2022. GDP per capita, here it's given in PPP terms. If we talk about the nominal terms, in 2021 it was 5,000 US dollars, and we expect in 2022 to be close to $7,000. Average real growth for the period of 2010-2021, 3.10%, quite high growth of 10.4% after the COVID year. Of course, we know that basis was quite low in 2020, but still 2021 was quite remarkable. In addition to that, we expect at least 10% real GDP growth in 2022. Inflation, you know, is a challenge, global challenge. Currently, if we talk about average inflation in Georgia, for the last 10 years, close to 4.3%. This year, we expect annual inflation to be close to 10%, and in the second half of the next year, all other things being equal, we expect it to be close to our target of 3%. External public debt, quite manageable, close to 42%, and in terms of Fitch, S&P ratings are given on the presentation, and we have had quite good years starting from 2017 in terms of improvement of ratings. Unfortunately, pandemic did not allow it to grow, and if not pandemic, I'm sure we would have been already there at the lowest level of investment grade. And I very much hope that the resilience of the Georgian economy, which we have seen after pandemic and after the war, will enable Georgia to reach that quite soon. If we talk about the financial system in Georgia, its financial system is quite concentrated. The lion's share, of course, goes to the banking system. Microfinance organizations are getting bigger. I mean, still quite low, but we started regulation of non-bank financial institutions back in 2018. We have quite a good system now. We found a synergy between financial banking system and non-banking financial system, and they are becoming quite attractive in Georgia, and I'm sure that their share will increase in the future because we see the growing interest from investor side for this microfinance for microfinance sector. Asset to GDP, the growth was quite good. Of course, in 2021, you see the reduction, but that's just the impact of higher nominal GDP growth and currency appreciation. Structure of the banking system, the banking sector itself is concentrated. If we talk about the largest two banks, the market share is about 75%. Concentration is a main challenge for regulator, but at the same time we look at it from positive side as well. There is a quite high competition in the system, and the banks which represent two largest banks, we see the competition in many directions, but again, to strengthen it and to make sure that there are no loopholes for less competition, our consumer protection, our financial education is directed towards increasing it even more. We have a special consumer protection department in Georgia. We pay attention, and commercial banks also know that that's very important part of our supervision process. If we talk about equity prices, you know, the two largest banks of Georgian banking system are listed at the London Stock Exchange. The stocks of our banks are pretty much and highly demanded by the institutional investors, and both banks have stable financial performance over the years. You see this fall on share prices, and there is always explanation, but actually, you know, they are not in isolation. You will see the fall before when pandemic started, then you will see the fall when Russian war started, but overall the performance is quite good. Today, for example, if you look at it, the share price of TBC rose by 45%. And the return to historical value. So again, these shares are quite in high demand. Profitability. If we look at and based on the profitability and accumulated capital buffers of previous years, the banking sector easily coped with the crisis, which was presented by COVID pandemic, and even after COVID pandemic, then the Russian invasion of Ukraine. As many regulators, in order to cope with the difficult situation, we released capital buffers during pandemic, and as of now, majority of banks restored their capital buffers ahead of deadlines, including TBC Bank, and it's quite comfortable situation with capital. Yes, and there is also comparison with the regulatory capital adequacy of other banks. There is one typo glitch there. It says on the right chart 250%. It should be 25%, not 250. So everything is fine. Otherwise, in terms of profitability, Georgian banking sector remains quite profitable. Historically, profitability is between 17 and 20%. 2020 was low. You may know that as a regulator, we requested commercial banks to make assessment of pandemic, impact of pandemic on portfolio, and we asked to provision possible bad loans, and that's why it fell, but at the same time, its impact is notable in 2021 when recovery, when there was an economic recovery, and many banks, in fact, many loans actually which were provisioned before did not need to be provisioned, and it definitely played its role for 2021 results, and we see that it is going to normalized level in 2022. The number which you see here for September 22, it's annualized. Well, I mean, it is quite high profitability. Of course, it cannot continue forever for a very long period of time, and but I think that Georgian banks are projected to remain very profitable. Liquidity coverage ratio, of course, issue of liquidity became very important since 2008 global crisis. In by Basel III framework, we and Georgian banks have quite comfortable situation here as well. During pandemic, we widened collateral base for refinancing loans. At the same time, we canceled the LCR requirement in local currency, and banks were requested to pay attention to observe it, the total liquidity, and banks maintained high liquidity during the whole period. In terms of credit activity, we saw that of course, there was an impact of a pandemic, and we see this in numbers. What we have noticed is that during pandemic, when we tightened monetary policy, once we noticed that inflation was becoming, inflation was increasing, and as in many central banks, especially in emerging economies and developing countries, we tightened monetary policy. And as loans became more expensive in Georgian currency, there was a tilt, and loans in foreign exchange have been extended, but later we took some macroprudential measures because our goal as a regulator is to make sure that inflationary problems are addressed as well as financial stability problems. And now we see that activities in foreign exchange loans are moderating. Of course, the tightening by Fed, ECB is also helping this situation. If we talk for the loans, the breakdown in sectors, both retail and corporate SME lending contributes almost equally to the growth. then in terms of also further analyzing sectoral analysis due to the inflation pressures which we had, which we are still having, but less and less. Consumer loans started to increase. If you compare 2018, 19, 2020, they started to increase, and we took some macroprudential measures to make, because the refinancing rate is not affecting it, and we took some macroprudential measures to make sure that it moderates and it is close to its sustainable level. And as we see from the consolidated banking accounts, these macroprudential tools are giving the results we have been hoping to receive. Again, credit to GDP ratio, after the measures which we took, we see that the gap which we had, credit to GDP, which was high in 2020s, and it's moderating, and which means that there should be less pressure on inflation from demand side, and at the same time, any financial stability risks should be mitigated. In terms of non-performing loans, Georgian regulator is considered to be sort of quite tough in many directions, and this as well. Of course, we saw some increase in non-performing loans during pandemic, but again, banks and financial system was ready to cope with it. And NPLs returned to its pre-COVID level. So this is on the left side, it's our methodology, which is stricter than international methodology, and on the right side you see international methodology used by International Monetary Fund, and even there Georgia is quite good in terms of NPLs. Well, I mean, there is also information about Ukraine, but I guess, you know, we all know what's the reason for this. So quite comfortable with non-performing loans in the banking system. Dollarization. Dollarization is a structural problem for Georgian economy as well for Georgian financial system. There was a question about dollarization in Georgia from one of the investors yesterday at macro level discussion. I also see this investor is here. Of course, we are aware of this, and we have been taking measures to reduce dollarization as market-friendly manner as possible. If you take any assessment of international organizations or rating agencies, dollarization comes as a first problem and vulnerability for the financial system. It has its roots. After the breakup of Soviet Union, dollar was the only currency who was fulfilling its role as a currency. But I have to say that the measures which we implemented very actively, I have to say, okay, my 15 minutes is over, but I will have just 2 more minutes. But we studied experience of many developing countries and successful countries in terms of dollarization. Latin American countries, Israel stand out as quite good performance, and we put together the basket for measures, and I think that they are working quite well, I have to say. If you look at the performance, dollarization, both deposits and loans, and even if we take the breakdown on the right side, breakdown through physical persons and legal entities, are doing quite well, and it's not our intention to bring dollarization to 0%, absolutely not, but I think that when it comes down to about like 20%, 25%, that should be the level which should be quite tolerable, I guess, for a regulator to assume that there are no financial risks stemming from dollarization. But again, I also noted yesterday that long-term low inflation and sustainable growth usually is a cure for dollarization. For interest rates, if we look Of course, on the left side, monetary policy was tightened in Georgia, and because of this, foreign exchange loans became more attractive. But now, with the tightening by Fed, by ECB, by Bank of England, we also see the increase in SOFR, in EURIBOR. So this impact will also, I guess, will diminish, and national loans in national currency and deposits in the national currency will be encouraged even more, which will also help to the process of de-dollarization. Yes, as continuation of the characterization of dollarization and what we are doing to make sure that it is still in force and it continues. It also gives a breakdown of interest rates. And at the end, because this financial system, banking system, does not exist in isolation. Just very brief information about the macro situation in Georgia. Inflation has peaked at 13.9%, 14%, and it's already has a downward trend. As I noted, we expect inflation is expected to be close to its target level in the second half of the day. Macroeconomic policies, which are conducted by economic team of Georgia, is praised on many occasions by many institutions, international financial organizations. We have successfully completed the 4-year program supported by IMF back in 2021, and very soon we started the new program, 3-year program. In this case, it's precautionary program, which is very good for signaling to investors that Georgia is implementing sound macro policies. I very much hope that improving doing business indicators in Georgia, even though doing business does not exist, anymore, but still, and favorable macro situation in Georgia will bring to Georgia even more investors, and there will be even more interest from investor side. As a regulator, we are always very happy and very open to meet investors, to explain, to give information. So please, anytime, come to us, ask us questions. We'll be more than happy to provide your response. And we are very happy that TBC representation in Uzbekistan also is taking its traction, and I very much hope that it will continue the same successful way in Uzbekistan like in Georgia. Thank you very much.
Thank you once more very much, Governor, for this presentation and to be together with us today. And now my 15 minutes begin. So, my presentation has 2 parts. First, I will introduce you who TBC Group, who we are, what we are doing today. And in the second part, I will present the strategy overview. Who we are. We, TBC, are a technology-driven company that exists for its users, cares for them, and make their lives easier. We have nearly 13 million users who currently engage with our wide range of services. As a leading financial institution in Georgia, we cover all segments, from micro entrepreneurs to corporate customers, from mass market retail to high net worth individuals. We have a leading position in insurance, leasing, investment banking, and payment services. In addition, we have the largest digital ecosystem in Georgia, TNET, which I will cover in detail later in this presentation. In Uzbek market, which we entered in 2019, we have the leading payment service provider, PayMe, and the first digital mobile bank, TBC Uz. Both are examples of our ambitious international expansion potential. This also will be one of the central parts of today's presentation. And finally, the growth, profitability, corporate culture, and the governance of our company are remarkable, and it places us in forefront of our industry. So this slide illustrates our huge potential for growth. The growth of TBC has been impressive over the last 4 years. We increased our addressable market 10 times, from 4 million to nearly 40 million. During the same period, the user base increased 5 times, reaching impressive 13 million, as I mentioned before. Today, Group serves 3.9 million monthly active users, which is 3 times more than we had 4 years ago. This underpenetrated market allows us to further increase the number of customers and market penetration in the future. Now, let me show our digital footprint across the group. We are happy to announce that we reached 1.1 million daily users in September. The number of digital monthly users are very exciting. We have 3.2 million users per month. As illustrated on this slide, daily active users to monthly active users ratio during this period was 34%, which also has the potential for further growth. And I think also very important to mention that 99% all of the transactions are done through remote channels. And our consumer loans and deposits are also disbursed digitally at the level of 70%. So our priority is to continuously improve our customer satisfaction. And as shown on this slide, we prioritize this not only theoretically, but also when we allocate our technology costs in practice. As I have already mentioned, TBC is a technology-driven company, and during the current year, we invested impressive 255 million lari in technologies. As you can see from this chart, nearly 70% of this investment went towards customer satisfaction and the growth. In addition, I'd like to also mention that investments were also made to further enhance our efficiency, risk, and compliance. So now let me show you who we are in Georgia. We pride ourselves that in Georgia we are not only the leading bank, but also we are the top provider all types of the financial services, and we are the largest technology company in the country. When I say we are the leading financial service provider in Georgia, I mean that we have a leading retail and SME franchise. We have the largest corporate banking in the country. We have a leading investment and brokerage house. We have the largest non-health insurance business. We have around 40% market share in POS transactions, which makes us a leading payment provider. And we have the largest leasing company in the country, and not to forget that the number of our group, TNET, is the largest technology company. So as I have already mentioned in the previous slide, TNET is the largest digital ecosystem in the country with 1.8 million unique monthly users, and has 40% of internet traffic among the Georgian traffics and gross merchandise volume of 100 million lari. This ecosystem has 4 business verticals, which are lifestyle, housing, e-commerce, and automobiles, which impressive market shares between 51% to 82% in the country. Having this largest digital ecosystem in the country enables us to first, to leverage our largest consumer base. Second, to generate net fee and commission income. Third, to generate loan leads. And finally, to strengthen our customer loyalty engagement, as well as to position as a future-proof, customer-centric digital brand. So now let's move to the most exciting part of the presentation, who we are in Uzbekistan. We began our business journey in this country just 3 years ago. And currently, we have 2 fast-growing, scalable technological businesses. One is TBC Uzbank, a fully digital mobile bank, serving customers through our fintech platform space, which allows our customers to make our operations through the application. In its 2 years operations, TBC has gained more than 2.1 million users and accumulated portfolios of around 300 million lari in deposits and around 270 million lari in loans. And the second is PayMe, a leading payment application. PayMe helps people to pay and transfer money instantly or pay utility bills, and allows merchants to accept payments online or offline through QR codes. PayMe currently has more than 7 million registered individual users and more than 55,000 merchants. These 2 businesses will be further separately presented and discussed comprehensively later today. Now, I'd like to highlight our growth, profitability, and efficiency. In the last 3 years, our loan portfolio annualized growth was 16%. And as you can see, we have the constant growth of our profitability, and in the third quarter, we had remarkable results as we achieved historically high quarterly profits, return of equity 31.1%. Finally, as we see on this slide, we are becoming more and more efficient every year. We managed to decrease our cost-to-income ratio from 40% in 2019 to 30% in the third quarter of this year. Now I'd like to reiterate our medium-term guidance and compare our performance in the last 4 years against these targets. Our aspiration was to have 10 million customers, and we have managed to outperform this target, and currently we have 12.6 million users. Our targeted loan book growth was between 10 to 15%. However, we here also outperformed the growth, with single exception in 2020 due to the COVID-19 pandemic. Our targeted return of equity was 20% plus, and we also outperformed this target and managed to improve the number to 26.6% in the 9 months of this year. Our targeted cost-to-income ratio was below 35%, and we are continuously coming closer to this target. And in the 9 months of this year, we managed to achieve 33.5%. And finally, we returned to our dividend payout ratio to 25% in 2021 after the COVID pandemic. As you might know, this year we have 30 years anniversary, and we celebrated this event together with thousands of our employees. And now I'd like to show you this short video. So after this great video, I want to say that we truly believe that happy and engaged team is the true reason for any success. And in our case, we treat this as a fundamental priority. So this we managed to have 66% eNPS, which we think is truly remarkable. We also believe that without diversity and equal opportunities, it will be impossible to cultivate a healthy corporate culture. Our strong focus on this resulted in female representation of approximately 36% in our middle management. And finally, one of the secrets of our success is that we create supportive environment when everyone can develop and grow. And as a result, only during this year, 20% of our staff were promoted internally. Another contributor to our success is the best-in-class corporate governance. As you know, TBC Bank PLC is a UK premium listed company, and we have a high standards of the corporate governance. We have 7 independent board members with a diverse range of knowledge and experience that ensures efficient management and supervision of the company. The group strategy is executed by the board through 6 committees covering all major directions. And our board recently added 2 committees, the technology and the ESG committees, in addition to the traditional mandatory committees. This helps us to focus more on the key strategic matters associated with technology, and also further increases our social responsibility to our stakeholders. We are proud that TBC was ranked number 8 among the FTSE 250 companies and number 1 in the banking sector in terms of female representation on boards and in leadership position in 2021. And finally, as this slide shows, according to the ISS quarterly scores on the 1st of October, TBC Bank Group PLC also has the lowest governance risks. Now, with the introduction about the company, let me share with you our strategy. As the leading financial institution in Georgia, we will continue further growth and penetration of our financial services and products in the country. In the future, we intend to fully utilize the large potential of our digital ecosystems. And as I have already mentioned in my presentation, we have successfully entered the Uzbek market, and we plan to further grow in the highly promising market. As you know, our mission is to make people's life easier, and we have an ambition to bring customers' experience to the next level in the future. In order to achieve these strategic priorities, we have all the necessary enablers: superior risk management, advanced analytics, cutting-edge digitalization and technologies, and our outstanding team. These are the main enablers which will help us in future to achieve our strategic priorities. And as a company, we are confident that we will deliver robust profitability and solid financial results. Now let me show a video which demonstrates how our mission to make life easier comes to life.
Our mission is to make people's lives easier. How does the mission come to life? Introducing you to one of the many possible customer journeys you as a TBC customer can take. TBC Digital Bank, all banking services in one application. Ticket G, #1 ticketing platform in Georgia. First subscription-based banking product in Georgia. My Home Jeep, the biggest real estate platform in Georgia. End-to-end online installment platform. Bendu Jeep, the most popular e-commerce platform. Saba Reader, more than 600 electronic and audio books in one application. TBC Digital Bank, the simplest way to pay your monthly utility bills. Swoopy, the first discount coupons platform in Georgia. TBC, making people's lives easier.
So after this wonderful video, let me now discuss our strategic priorities in more detail. Let me start with our strategic priorities related to our banking operations in Georgia. First, we are further aiming to grow in specific segments such as consumer and micro loans. Second, we intend to refocus our growth towards fee and commission income generation on the back of the large potential of the payment businesses. Third, we are also planning to further strengthen our focus to end-to-end digitalization, and also we plan to increase our efficiency by utilizing our data analytical capabilities. And again, utilizing the potential of our digital ecosystem is one of our main strategic priorities for the future. TNET is the largest technology company in Georgia, and if we fully utilize its resources, this will significantly contribute to our company's growth. It is our medium-term goal to increase gross merchandise volume from the current $100 million to ambitious $1 billion. Additionally, we aim to generate a net income of $50 million from this ecosystem and also to generate $1 billion leads in the medium term. Now, I will tell you about our priorities regarding Uzbek market. In this regard, our medium-term targets are remarkable. We are planning to generate synergies between PayMe and Uzbek Bank during the coming years, and we are targeting to have 5 million monthly active users and to have a return of equity 30% plus in the medium term in our Uzbek operations. We also expect that our Uzbek operations will contribute minimum 10 to 15% in our group's net profits. And this is my last slide, and I want to show that we are planning to add 2 new targets and also reiterate our existing medium-term targets. So we want to almost double our monthly active users and to achieve 7 million. As I have already mentioned, we also expect that Uzbek operations to contribute minimum 10 to 15% in our group's net income. And also, I'd like to reiterate our existing medium-term targets annual loan book growth of 10 to 15%, return on equity more than 20%, cost to income ratio less than 35%, and dividend payout ratio 25 to 35%. Now I'd like to invite Nika Kurdian, please.
Thank you. The mic is working. Great. First, it's an honor to be here and to be representing our results in Uzbekistan, which have been quite remarkable. And I have, I guess, not a less video than Vakhtang had, so I'll start with the video first. One more.
In Uzbekistan, TBC Group presents two biggest fintech companies. In 2019, we expanded our operations to Uzbekistan, adopting the growth opportunities offered by the Uzbek market. Particularly attractive with growing population of around 35 million people and average age below 30, out of which approximately every fourth person is already registered with TBC. We are represented with two fintechs, PayMe, which is the leading payment app in Uzbekistan, and TBC Bank Uzbekistan, the first digital bank in the country. TBC Uzbekistan serves more than 2 million registered users and is covering all regions in Uzbekistan, with 42 customer acquisition points, 209 point of sales, and 10 showrooms. We serve retail banking customers through the mobile app based on our fintech platform, Space International, while our smart next-generation showrooms and compact customer acquisition points are designed for customer onboarding. The payment application, PayMe, serves more than 7 million registered users and offers high-quality payment solutions to retail customers and merchants. It has become a loved application for retail and business customers by meeting all their payment needs, would it be P2P transfers, online purchases, or payments in physical stores. Our Uzbekistan achievements have exceeded all our expectations. 9.4 million registered customers, loan portfolio of 95 million USD, deposit portfolio of 105 million USD, already generating around 0.6 million USD profit by the third quarter of 2022, after just 3 years of entering the market and launching the Greenfield Bank. These all with happy team. Our ENPS at TBC stands at 69% and 57% at PayMe. Our vision is to develop PayMe into a multiple vertical super app, which will be embedded into TBC Uzbekistan financial services.
So, why Uzbekistan? We are asked this question frequently, and basically there are several answers, obvious and non-obvious in my opinion. Obvious is that it's a country in our region, firstly, which is very close to Georgia culturally and historically. Secondly, because it has one of the biggest populations in the region, which is very young, around 30 or below 30 years, and growing. So basically Uzbekistan offers a massive opportunity in terms of total addressable market. And plus, what is very important, we saw massive reforms in the country which enabled many things, especially in digital. For instance, one of the last ones being digital onboarding for private individual customers, which physically allowed us to onboard customers from their homes. However, there's other unobvious or sometimes not known things, which is, for instance, 30 million payment cards already present in the country and active. Or internet penetration being very high, right? 24 million users using internet. So this all lays very good ground for us to operate in Uzbekistan in digital manner with fintechs, with two big fintechs, the bank being the first one to be present on the market in its form, and PayMe being one of the biggest fintech companies in the country. Now, how basically we saw the video, it was a very good summary, but just to mention certain things, these two companies, basically in TBC, we already have several products. We have car loans, cash loans, deposits, two types of deposits, cards, international and local cards, transactions, of course, and this gave us more than 2 million customer base in just 2 years from the launch. In PayMe, we have more than 7 million customers registered, and PayMe is majorly a payment service provider for two segments, merchants and private individuals. Private individuals can top up their mobile phone, pay utilities, transfer money, P2P, or use our QR network of more than 50,000 merchants around the country to pay through QR codes the services they get. This has been the growth track, so to say, from the very start of our presence in the market until today, until the third quarter of this year. There are major milestones, so to say. However, basically, this all won't be possible. You see the number 9.5, right? It's a massive figure. Massive also in terms of representation in the country, considering 35 million population. But this all won't be possible if we didn't have two very important pillars upon which we basically base all our activities. One being the team. We call happy, young, energetic, and positive team. And this is also represented in our NPS scores in PayMe and in TBC. Both are very high, high compared to the group, high compared to the market and region. And this makes us very happy. The average age is 27 years old, team members, and most of them are technological. So this is also a very important component. And second is corporate social responsibility. From the day one, we understood that this is something we have to start doing from the day one. Start what? To be a corporate citizen, a proper corporate citizen, meaning we have to invest our attention into financial literacy. We have to invest our attention into popularizing certain things about Uzbekistan which amaze us. For instance, Uzbek Ornaments was the project which quite recently, by the way, won many prizes on one of the biggest regional advertising festivals. Or investing into popularizing the topic of technology, where we have blogs, we have partnerships, many programs. And this corporate social responsibility program will continue, of course. It is not just for the start, and we'll be investing furthermore in different directions. But these are, for now, the key pillars. This message is very important to us because we've been operating in the country, we've been investing in the country, growing in the country, and by the third quarter of this year, we already saw the profitability coming for our Uzbekistan business as a whole, which makes us very happy. And one more time confirms that we are doing something right. So kudos to the team. Now, moving a bit down to two businesses, I will summarize. This slide represents the concept for Space Digital Banking Platform, which we always indicate. Basically, the concept is that we developed a technology platform, Space, which basically is a hub for our banking products and technology, and which enables TBC Uzbekistan to operate the app in the country. So basically, the app is developed by Space Technology Platform. Space operates in Georgia, but the main market for Space, of course, is Uzbekistan, where we have most of our customers. And basically, the whole product suite or technology solutions, would it be risk management, anti-fraud, or many others, are coming from that platform. This is important because, as you know, starting a bank is not an easy job, and positioning the bank in a very short period of time on the market is even more difficult. These are the market shares. We are already present on the market and comparable to long-standing banking players in loans and deposits. However, for me, one of the biggest achievements is the chart in the lower right side, which is top of mind, which means that the brand perception on the market has even higher market share. So customers in the country know us, they heard about us, and they want to have a relationship with us. And this gives us even more promising vision that we'll be penetrating the market furthermore. These are some commercial figures. Basically, we have 2.8 million downloads in these 2 years. We have 1.3 million cards in the app. I'll show you a bit later how these cards are generated, but having 1.3 million cards already in the portfolio is massive too. The NPS score, as we all know, just to say once more, it's how much recommendable our app, our business is to other customers by our customers, stands at 70%, which industry-wide is really remarkable. And again, this proves to us that we are doing something right. Or, I don't know, 150,000 loans and 68,000 deposits. For instance, deposits has a very interesting insight because when you launch a digital app, which is first time happening on the market for a banking business, for us it was a big question mark. Would we be successful in deposit gathering? Where we ended up is that we have more deposits than the loans, also in terms of portfolio. And this is also remarkable because this is fully local currency funding for our lending business. And one more time, this is very big trust from local customers. In terms of cards, I was saying, yes, these are the registered customers above and the cards, 1.3 million cards. However, there is a split. And this split is something very specific to Uzbekistan banking market, where you can use your application as a wallet too. So the customers can link their card issued by another bank to your application and transact through your application normally using your app. So we have issued our own cards, 451,000, and we have gathered, so to say, attracted 852,000 cards issued by other banks. So the customers having other banks link the cards with us and transact through their other cards in our application. This is also, in our opinion, a very good achievement. Customer acquisition costs. We all know that in digital banking business, customer acquisition is a burden. We managed to keep the customer acquisition costs at the level of $5 per customer, even if the customer base was growing massively. As we also know, as the customer base basically grows and you penetrate even more, it becomes more costly to attract new customers, right? But we managed to keep it at the same level. And this, of course, because we have very strong team in digital marketing, which was learning as we were going forward. And we kept this levels stable. Loan portfolio, as I mentioned, we already have 269 million Georgian lari portfolio, 150,000 tickets, so to say, contracts, which is also massive because we started lending, as it was on the initial slide of our roadmap. We started lending not in the same moment as we started our commercial operations. It was like a lag of 9 months, so less than 2 years. And we already have a penetration of 153,000. And the only channel we distribute loans with is our application, so there is nothing else. Or deposits, 297 million Georgian lari portfolio, where we have 68,000 deposit customers. Yes, these are all the channels. We also saw in the video, there was a very interesting insight. Initially, when there was no digital onboarding, we understood that the last mile of the customer onboarding had to be done through our own effort. So we deployed the courier model, so the delivery manager model, basically people who would do the last signature with the customer, and opened many customer acquisition points all across the country. Because some customers still prefer to come and touch the branch, touch the physical outlet, which we call showrooms, because inside there is nothing else, just our team members in our t-shirts standing and onboarding customers or explaining the concept. This also actually was a very good finding in terms of deposit acquisition, because people wanted to feel a tangibility of our brand, because they wanted to see where is their money and to come and maybe complain at one point in time. So in every big city we have the showrooms, and we have many more so-called customer acquisition islands in shopping centers and big shopping malls all across the country. What is very important, the top of mind things I mentioned, 41% TBC is perceived as a digital bank by the customers, so people know that basically TBC is the first digital bank in the country. Moving on to the payment business, basically we have PayMe, 7.4 million registered customers, being one of the biggest players on this market, 2.3 million active users and 55,000 merchants. And basically, PayMe has very strong DAO to MAU parameters too, 35% and 45% in merchant business. Moving on, PayMe transactions, 111 million transactions by the end of last year, and already this year 122 million transactions. And in 9 months of this year, the volume of these transactions went over 5 billion US dollars. Georgian lari, sorry. Yes, now moving on to the strategic vision. Basically, this is a bit complicated slide, but the message is simple. PayMe gives us the chance of building a super app based on PayMe. PayMe is a very well-perceived app. Brand is loved by the customers. We have 7-point-something million customers in PayMe already. So if we embed the TBC products into PayMe and build verticals, various verticals in PayMe, which is already started, we will be able to have an application which is almost in every bankable customer's pocket, offering various services. And of course, we know these practices all over the world, and we are on this road too, and hopefully we'll be very successful as we were until now. And Vakhtang said the midterm targets, basically we are committing to these figures, and we are sure we will be delivering it. So by this, I'm finishing my presentation. Thanks a lot, and again, it's an honor to present Uzbekistan's case.
Thank you, Nika. Great story we have seen. And now I'm going to speak more boring or more, let's say, exciting things, numbers. I'm going to present our remarkable financial performance for the Q3 and 9 months. Let me begin with an overview of our proven long track record of the robust profitability. As you can see on this slide, year after year, we delivered and managed to achieve outstanding results across all the key metrics with a strong growth trend. And even during challenging COVID years, we delivered double-digit ROA, almost up to 12%. And Q3 is no exception. Actually, it brings our profitability to a next level with 31.1% ROA, and our 9 months is 26.6. Now, next slide, I would like to deep dive more into the details. Our net profit increased by 55% year on year for the quarter and 28% for 9 months. And the key drivers were both non-interest and actually NII. And as a result, as I mentioned, we are looking at ROA of 31.1% and 26.6% for the 9 months. Now, next slide. I'm going to slide 55, where I would like to discuss our profitability drivers. Both of them, as I mentioned, actually performed very well. So 56, so our NIM, so I'm sorry. Sorry, I jumped this slide. So now, as you can see, our NIM increased by a remarkable 100 basis points compared to last year, landing at 6.3%. And actually, we continue it to stay more or less at level. Our non-interest income also increased significantly. And there were 2 key drivers. The first one was FX, increased spreads, volatility, but to mention new treasury products, we are also the drivers of this. And our net fee and commission income also increased significantly, and we also continue this growth momentum to continue. Now, going to next slide, total OPEX. So it increased at 34%, and it may seem high, but we need to consider we grow our business. As Vakhtang mentioned, we actually put money into our technology, both here in Uzbekistan and in Georgia. Also, our revenues, we had a high actually income that we need to pay bonuses to the staff. But the key point to mention here is that our income grew more than our cost. And that drove our cost to income ratio first time below 35 and actually 30%. 29.9% for the Q3 and 33.5% for the 9 months. Now, if I go to the next slide, our cost of risk. It actually started to normalize, as we already anticipated for a long time. In Q3, it was 100 basis points. That brought 9 months into 70 basis points. And NPL remained at a very strong level, 2.3%. It was stable quarter on quarter. And our coverage ratio is also very strong, 164%. So I would like to briefly discuss our loan and funding position. On the loan side, we increased 19% year on year. It was mainly driven by MSME and retail segments. And on quarterly basis, we remained more or less stable, around up to 2% growth. Corporate book decreased by actually repayment of one large CIB customer. Actually, we continued the more aggressive growth trend into the customer funding side. We increased by 29% year-on-year and 12% on quarterly basis. And we see the results on the next slide, actually this few slides after. Another point I would like, and we are very proud of, is our solid capital position. We were well above regulatory limits for all tiers, but also I would like to mention our CET1 ratio increased even despite paying a generous interim dividend in September. It increased by 30 basis points, and the key point, it was driven by net profit, further supported by, I would say, head tail from FX, but profit was the key driver. So our liability structure, and I already mentioned our funding increase, customer funding, that resulted that share of customer funding is 73% into our total portfolio. And we have been growing the trend, and it's up by 2 percentage points year-on-year. I5 funding, both sub-debt and loan, is around 80%, 1.9 billion lari of our portfolio. Our liquidity is very strong, well above regulatory limits. And I want to mention also that if you translate on Basel basis, it's 351%. That puts us in a very strong position. And now, long-awaited numbers of our Uzbekistan business, most of them were already mentioned. And key point I would like to highlight, in Q3, the bank was profitable. Actually, the country was profitable. And we expect the bank itself on its own for 23 and throughout 23 to be profitable. That's also a key message. And on the bank's key ratios, NIM was 16.2%. Many of you asked many times. Here it is. And our cost of risk is 7.4%. So it means that risk-adjusted basis, our margins are very healthy and sufficient. And I would like to reiterate our midterm targets once again. These are the new targets: 30% plus ROA, 5 million MAU, and 10 to 15% profit into group share. And I would like to move to our last slide, where I would like to conclude how we are going to use our strong capital. Where are we going to put it, and what it brings for the growth and for the shareholders. First, we are going to continue our steady growth in Georgia, more or less maybe nominal GDP growth, develop our Uzbek business. It means to grow our digital bank, and we target to acquire minority shareholders of PayMe next year, and we have sufficient capital for this. And third, we are going to pay 25 to 35% dividend to our shareholders, and from September numbers, one can easily guess the direction of the travel. Therefore, all this will be supported by our high ROA, 20%, probably few pluses, and 10 to 15% annual loan book growth, probably in the medium term at a higher end. So on that note, I would like to thank you for your attention and open the floor for the first Q&A session.
Thank you, Georgi. Just as a reminder, if you would like to ask your question, please raise your hand. The online participants can submit their questions via our live chat at the webcast, and I will read out those questions. Thank you.
After such a great news.
There is a question. Anna.
Good afternoon. Thank you very much for your presentation. It's really amazing. If I may touch on several points, if I may. In the strategy, you mentioned that you're actually looking at the other international expansion option outside of Uzbekistan. Can you please elaborate a little bit more on this detail? That's the first point. The second point, coming on the back of what the NBG governor has been presenting, he was talking about that still around 96% of the financial sector contribution to GDP are the banks. I was wondering on whatever you are looking to more aggressively go into the other financial verticals, apart from insurance, let's say wealth management, capital markets, especially given what's going on. Thank you.
So, Thank you for this question. I will try to answer the first question. So, first priority, as myself and Nika made presentation, so for us very important the Uzbek market, and we are successfully developing our business in this market, and we have two directions, payment and the Uzbek bank, and we have very ambitious plans. So to achieve this 5 million monthly users and to have profitability 30%, you understand it's not an easy job, so it's a very hard work we have to do there. And to answer your question, probably next minimum 12 to 18 months, our concentration will be on the Uzbek markets, but what I want to say that also we will look to the other markets, but probably it will take more time, and in 2025 we'll be ready to go to the other markets too. Goga, could you answer the second question? Vertically done, guys. Wealth management.
Thank you. I wanted to ask, given that the penetration of the other financial verticals, especially the capital markets, is still fairly low according to the presentation coming from the NBG governor, I wonder on whatever you would be looking to explore opportunities in wealth management, asset management, and the other verticals related on the capital market side within Georgia, especially given that the liquidity profile is obviously very strong at the bank and there is an appetite for alternative options. Thank you.
Thank you, Misha. In fact, we already started, and just not to spoil my presentation, I already have a few slides about how we started the asset management, just a few months ago, and also on the capital market development. So I suggest I will cover in my section.
We have several questions coming online. So how much do you plan to invest in Uzbekistan in 2023?
Thank you. As I reiterate, we have sufficient capital to invest into Uzbekistan. At the moment, we are working on the plan, and the quantum probably we are not disclosing at the moment, but the amount that will allow us to reach our ambitious plan, that will be our target, and we are all set up for this.
Thank you, Georgi. One more question for you. In your opinion, what proportion of 3Q fixed income is sustainable?
Again, me? So, obviously, what we have seen in Q3 on FX is not sustainable overall. But what I want to say, what you have seen in Q2, it was a very strong number. And many of you thought that it's not sustainable. Actually, the Q2 number is our business as usual line. That means that around 50 to 60% what was in Q3, probably business as usual. The rest is one-off. Question, how long this one-off continue, few months, quarter, we just don't know at the moment. But overall, our FX will be significantly be increased compared to what we said in 21, and we should expect positive trend there as well.
So to add from my side, our CFO all time is making very pessimistic assumptions. So I believe that the growth and these revenues will be continued minimum 6 to 9 months. It's a minimum.
Thank you for presentation. Kachakolishvili, investor. Question to Georgi again. More and more people are talking about forthcoming crisis, economic or just financial. What do you consider as a CFO the most vulnerable part of TBC business as a whole, and what are the main strategies of facing them? Thank you.
Yes, thank you very much. Good question. Of course, there's uncertainty about geopolitical situation that remains a risk. It's very difficult to answer that poses. From our bank perspective, on our liquidity and capital position, we have sufficient buffers built up for such event. We have all the internationally established practices such as RRP, Recovery and Resolution Plan, ICAP. Probably the key risk for this system is the lari and lari stability that remains, for example, because our capital base strongly depends on lari, and that may get overnight hit. But for that, we also consider into our stress scenario, and we have built sufficient buffer for that.
Thanks. I have two questions. One is, I was wondering if you could elaborate a little bit more on the new treasury products, or what has been driving the non-interest income beyond just the FX. And then I have a question for the National Bank. I was curious sort of what incremental areas of regulation you'll be focusing on for the next couple of years, if there's things you think are under-regulated at this point.
Again, so it's me. I need to stay here probably. On the FX products, there is a wholesale market that will become more active on FX side. On the wholesale market in Georgia as well, exchange points, also different maybe products on the derivative side. So those are the kind of key points that we have been developing at Treasury. Treasury we are seeing as a market business going forward, and some more new products to come. On net fee and commission income, if you looked in our video, for example, we are the first bank to have a subscription model. That's a new product, for example, that we introduced. There are few small things that are new to the market, and that helps us along the transaction volume growth to increase our net fee and commission income.
So to answer your question, we are every year we are publishing and updating our strategy, supervision strategy. It's on our website, both in English and in Georgian. And the idea behind is pretty much to respond to questions like this. So we have updated it, if I'm not mistaken, months ago. So this is to give sort of transparency and credibility for the future. As of now, we don't have any sort of big regulatory changes anticipated. What we have done before pandemic is that we created quite a large basket of macroprudential tools, which was linked to, which was sort of in a way continuation and completion of Basel III framework. If anything, what I expect at this point is that we can be recalibrating these macroprudential tools based on circumstances we will have and what we will need for ensuring financial stability. So no big changes anticipated again, and on our website you can find quite comprehensive information and analysis about our strategy for supervision.
Thank you. And we have two more questions. Will you do projects related to crypto in Uzbekistan?
For the time being, we do not see this coming. However, we know the changes which are happening in terms of regulation and crypto, basically demand on the market. We are observing, but for the time being, we are not on that point.
Thank you. And there is one more question, Nika, for you. How are you going to compete with other payment systems? What is your main advantage over your competitors?
I think for now we hold a brand, PayMe, which is having the biggest top of mind on the market, which gives us more confidence that customers love this brand and use it. In terms of active customer base as well, we are, if not the biggest, one of the biggest. And also the vertical strategy, otherwise called super app strategy, we think is something which will give us first-mover advantage in many verticals, and this will create more traction. And plus the massive growth in our merchant acquiring business, we doubled or even tripled over 2 years the merchant base in PayMe, will give us more synergies in terms of network effects. So these are the main accents basically.
There was one more question from the audience.
Great job, per usual. Really excellent results and presentation. I just wanted you to speak a bit about the employment environment, both in Georgia and Uzbekistan, whether you're able to find and attract talent, retain talent required maybe on the technical side, or to sustain the growth plan.
Yeah, I will try to answer this question on the gross level, and afterwards maybe Nika will add on the Uzbek market. So on the gross level, as you see, EMPS and the trust and the brand which we built it 30 years already, I think it's very helpful. But the real challenge which we have mainly in the technologies with the IT people, because the competition we see not from the locals, I mean in the Georgia or the Uzbekistan, but the reality, we have see competitions from the global companies. But how to challenge it, how to manage that, we are doing a lot of things for that area. First of all, to be interesting for the IT people to work in TBC, and today we are saying that, as I made in my presentation, that we are technology company. We are not saying that we are the bank, and in reality today we have more than 1,000 IT data analytic managers, when credit managers much less, around 500 to 600. So it means that in real terms, we are more technology company than like a standard commercial bank. And how to manage it? So 2 years ago, we established in TBC IT Academy, and up to 800 new IT people just we are educating in TBC, and approximately around 60 to 70 of them are becoming employees of TBC. This is very helpful. But also to be open in IT, up to work today, work around 17 different nationalities, beginning from Asia and ending from Spain and Portugal. So everybody employed in TBC, because we need these special areas where there is a no knowledge in Georgia, and we need this knowledge. And so we're bringing this knowledge from the experts. Thank you.
I wouldn't say Uzbekistan, in terms of challenges, in terms of employment, is different from Georgia. Yes, technology stuff is a difficulty. However, in Uzbekistan, on the bank side, the technology platform space is the most tech-intensive, so to say, item, having approximately 200 people there. And there, of course, we are sourcing people from TBC Group IT Academy and other sources. I would add that this NPS, eNPS score mentionings today all over the presentations is another big accent we are doing, because frequently it is important for all kinds of employees to feel the company and to be part of it, right? And this engagement is something we are putting huge attention on in Georgia, in Uzbekistan. In Uzbekistan, on top, basically in PayMe, we try to keep ourselves as efficient as possible in terms of focus. So at this point, we are not having any troubles there in terms of staffing the team. However, as the verticals will add and we will grow, most probably we will face these challenges, and we'll use the same tools.
Thank you. If there are no more questions, I suggest that we have a short break. We can, 10 minutes? Yes, 10 minutes. Just to remind you, the coffee break is served in the networking area. It is in the main hall to the left, in the end to the left. And please come back sharply in 10 minutes so that we can start on time. Thank you.
Okay. Now technologies. Hello, I'm Bidzina Matsaberidze. I'm CIO of TBC Group. And I'm happy to tell you a few words about really outstanding technology team which we have, consisting more than 1,200 employees from, on average, 10 different countries. And just a few years ago, we were operating only in Georgia, as you probably know, and all our technology specialists were originated from Georgia. And then we made the decision to go international. And as you know, we are operating now in Uzbekistan, but from the technology team's perspective, we went much more international already. Actually, we have converted the restrictions and limitations of COVID-19 pandemic into the opportunities to hire the experienced software engineers from around the world. We allowed everyone to work remotely, and we are hiring experienced software engineers because we are raising the new generation, new technology talents ourselves in TBC IT Academy, where we have around 200 graduates every year and increasing. And this outstanding team delivers not only the amazing products, but I am happy to say that this is one of the happiest teams in the world as a technology team. Because as you see, we have tech employee net promoter score 76% and tech employee happiness index around 90%. How we do this? We are operating in a flat organizational structure where each product, like deposit, like a credit card, car loan, anything, is owned by small teams. And these teams are making all the decisions around these products, around the products they own. So they are delegated to take decisions, and this ensures the agility and the speed of decision making. And this means that these teams are empowered and autonomous as reasonable as possible. Because of course, in order to control the risks, they are working in predefined, pre-agreed frameworks and architecture. At the same time, I'm also very proud to say that around 20% of the working hours is given for professional development. So the team members are not working on the regular business projects, but they are working on themselves. They are trying something new. They are researching new technologies, and hopefully later they are using these technologies to create even better products for our customers. What we do in this team, as Vakhtang mentioned, we are building innovative digital ecosystem for our customers. So we put the customer in the center of everything we do, and we provide different services through digital platforms. And this ecosystem and these platforms have key characteristics, like they are agile. These platforms are agile, meaning that they are continuously updated based on the customer feedback and customer needs. They are resilient, meaning that they have to be always available, and they are protected with the best-in-class cybersecurity practices and tools. And they are simple, meaning that they are simple to use, and they have intuitive and pleasant user experience. And in total, this creates the superior customer experience and makes our customers' life easier. Of course, these characteristics needs constant focus and constant effort from our side. And as we speak now, there are three parallel strategic initiatives, projects running. For example, here we have TBC Bank, Georgia's example. So for agility, for example, we are running the so-called X5 program, which means that we are increasing the number of software deployments 5 times. And why it is important? Because we believe that you are as responsive to the market as quickly you can deliver the software changes. As often you can deliver the software changes to your customers. So just a few years ago, we were making 4 deployments per day. Now we are making around 10 deployments, 10 changes in our applications, in our software per day. And in 2025, we will be making more than 40 deployments per day, I believe. For the resiliency, we are running so-called X3 program, meaning that all the software needs downtimes, have the downtimes, right? Because of some software incidents or because of some regular maintenance. So today, if we sum up all the downtimes which we have during the whole year, it's around 1 day, like 25 hours. And we want to make it 3 times smaller and almost unnoticeable to our customers. And for the simplicity, we are regularly running the simplification programs. Because some products, some business products may be very popular, were maybe very popular 10 years ago, but now they are less popular. And also some similar products exist with some similar features. So we are trying to remove the duplications and remove the less popular products. And we believe this is important because we want that our customers choose the most suitable products for them very easily. And while talking about the strategic programs and projects and initiatives, we should definitely separately mention the data analytics because we believe that data and analytics is one of the key competitive advantages of TBC Group. We have around 200 specialists across the group, I mean data professionals. And during recent years, they have delivered over 25 artificial intelligence projects, generating 137 million Georgian lari additional profit. Let me also share how we make sure that our technologies don't get old and how we constantly modernize them. So we have 3 types of teams. We have research and development teams who are continuously exploring new technologies and the applicable technologies they are providing to the platform teams. These platform teams are creating the software platforms and tools for our software engineers to maximize their productivity. And these software engineers working in product teams are creating new products or developing existing products to enable business growth and create best customer experience. And I think this slide was presented by Vakhtang as well. Looking at the technology investments from another angle, we can clearly see what are our priorities. So around 1/3 of the technology investments goes for initiatives which enable business growth. Another 1/3 is the customer satisfaction. And of course, another 1/3 goes for the efficiency and risks and compliance regulations. And finally, I want to also share with you some technology pillars or principles which are very important for our business. First of all, we are using only proven technologies. This means that we may experiment with the new technologies, but whatever goes to production, it has to be proven. And it has to have the enterprise level support from the corresponding vendor. This means that we are controlling the technology related risks. This means this is also translated into the resiliency. We support the modularity. We love to build the systems, the modular systems instead of monoliths, like Lego blocks. And this is important because our teams, which I mentioned, cross-functional small teams, are able to develop the products independently from each other. And we support reusability. We love reusability because it is translated into the cost efficiency. Again, that Lego blocks, that modules which I mentioned, if one block is built with by one team, if it is reusable by other teams in the same company or in other subsidiary, they are reusing it. All these systems we build, these systems are scalable, meaning that they can automatically scale up and scale down based on customer demand. And this is also translated into resiliency and cost efficiency. And finally, in the recent years, the systems we build are cloud-ready, meaning that they can run in both, on-premises infrastructure as well as in cloud infrastructure, meaning that we have this flexibility, portability, to select where to run our software. And there's a, let's say, foundational formula for everything this. We have the formula, what we do by ourselves, by our hands, what we do in-house, and what we outsource. So whatever is strategic, whatever is changing, often we are doing by ourselves in-house. We are outsourcing other things. This means reduced vendor dependency, this means competitive time to market, and this means cost efficiency. And finally, I'm glad that it's not only us who are talking about our amazing products. Here we see the recent international recognition of our achievements, and here we see well-known international magazines and reviewers, and I'm even more happy to see here in this list the technology giants like Kong and Amazon appreciating our achievements. Thank you. And I'm inviting George Shumashvili, who will be talking about the digital ecosystems in more details. Thank you.
Thank you, Bibi, for introduction. Today I will tell you a little bit about our company, about TNET, what is your strategy, what we achieved, and how we see future in development of our digital ecosystem. After the new strategy was approved in 2022, TNET became the largest Georgian technology company. We are presented in 4 verticals with 8 platforms in e-commerce, in lifestyle, in housing, and in auto. To emphasize the scale of our business, I will tell you some more numbers that will give you idea of our ecosystem. What is it? TNET has 1.8 million unique users, which is 70% of Georgian total market, adult market, I mean. 1.4 unique users, which is monthly active users. 40% of total Georgian traffic are generated on our platforms. 5 billion page views are generated on our web applications and mobile applications. 100 and more companies, sorry for my loud voice, 100 and more companies use our campaign management system, including international companies. 100 and more 1,000 leads are generated on our platforms for financial and non-financial institutions. And what is remarkable, conversion rate is 8%, which is higher than benchmark average. As for market share, we use international tools similar web. On this slide, you can see that we are dominated in all verticals. In lifestyle, we have 78%. In auto market share is 82%. In e-commerce, 69%. And in housing, 51% respectively. Our direct competitor represents only in 2 verticals. In e-commerce, with 10% share, and in housing, with 1% share. On the slide, you can see our dynamic progress, what we have already achieved in 2012. Here are 4 main parameters, parameter indicators. GMV, net income, GMV per user, and the leads, which means loan portfolio for financial institutions. As you see, we have increased 4.5 times from 22 million to 100 million lari our GMV. It was only in 1 year. Net income increased 10 times. It was from 0.5, we increased to 5 million lari. GMV per user last year was only 12 lari, and we achieved to have 50 lari already. And the loan portfolio, which was 24 million lari last year, it is already 100 million lari. So here we have get great results of our ecosystem, of our strategy, what we have already started to implement, and it's already reflected to our ecosystems in great figures. What are our key enablers? We believe the modern technology approaches with the best talents and data capabilities which are unique in our company grant us a competitive advantage, which will be the main way to our success. Advanced, diversified technologies that TNET use and the agile structure framework enable our staff to develop and at the same time give us a competitive edge that translates into the privilege of being able to hire the best talents in the country. Million of users, billion of page views, million of consumer behavior create countless data. Data is our main asset. We track every year more than 60% of Georgian customers' consumer behavior. We have 35% consents of Georgian total population that it's incredible and it is near to European benchmark. We believe that in the next year we will get 50% of total population's consents about their personal data processing system. The process shift from classified business to a marketplace business model has already started. It has been reflected in 2022 years results. As I mentioned before, we increased GMV from 22 million to 100 million. This is just the beginning that will have a much bigger impact in the future as this process gains momentum. Data leverage monetization is an important initiative. We process customer behavior and the output is a predicting of the exact customer needs. We have already attracted more than 100 local and international companies who are producing campaign management with our data. And conversion rate is 8%, which is really superior figure. In the future, we are going to reinforce the data science and AI team and bring knowledge from abroad to this field. Super App is a great initiative, what we have. All countries are waiting for its launch, and in the end of 2022, we will launch our MVP. We are putting all our services together in one mobile super app. We will add payments, and what's very important, we are adding external partners' daily services like food delivery, like taxi, and etc. We believe that TNET Super App will become for everyday use. To feel the beauty of the product, what we are doing, I have prepared a video teaser about TNET Super App.
Introducing the concept of TNET Super App. Super App will be an answer for all your needs right in one place. Everything at your fingertips. Tickets online for your convenience. And don't forget about the special discounts. Shop with us or have a ride with us. Even order food with us. What about real-time crypto exchanges? Features tailored to your needs. Personalize a dashboard. Take a look at upcoming events. Make payments from your wallet. Get the best offers for your financial needs. And most importantly, your loyalty pays off. TNET Super App. Everything a click away.
Thank you for your attention. I will not tourniquet.
George, can I have the cutout? Georgi, thank you for the amazing presentation. It's really fantastic to see how big is our traction in the digital space in Georgia. Well, I don't have the nice video, but I really hope that my presentation is going to be exciting enough and really encourage you. So I represent retail, MSME, and the payment business in Georgia. My name is Tornike Gogichaishvili. And so today I'm going to talk about our achievements and how we are progressing on our local market. Well, it's a main market for us, well, at least for now. Our loan book, our market shares in loan book and deposits are quite remarkable on the back of our exceptional Net Promoter Score. We're constantly refining our customer-loving culture. The thing that really we think that is how to say, the differentiator for us, and that's why we think that our customers really love us. Our dominance in MSME is even more evident. We have more than 37 market share in the loans, and 70% of newly registered legal entities choose to bank with us. I think this really says a lot. So what enables us to be in the forefront of the market? I would really like to underline 3 key main enablers for us. Digital banking. We see today more and more customers are leaning towards digital, using their mobile application and internet banking application. They transact more with our mobile banking and also do other services. Our payment system is widely adopted in the country. And most of our, and well positioned not only for our private individuals, but also for other payment ecosystem players like merchants and third service providers as well. And of course, we couldn't miss out to underline our data capabilities, which basically creating a lot of value already in our organization, and we have data engineers already across all units of our organization. And using data analysis in our everyday decisions is already a new normal for us. Well, most of the time, figures speak for themselves, but international recognition is something that really motivates and inspires us to do the extra mile. We are really delighted and honored to be repeatedly named as the best bank by various respective organizations in different nominations in recent years. Perhaps the most recent one, we've been named as the best bank in Georgia and Eastern and Central Europe by Global Finance for the year of 2023. Now let's talk about the retail banking. Our number of active customers grew by 7% on a year-over-year basis, which is more than our CAGR growth for the years of 2019 2021. For the time being, we serve approximately 68% of the bankable population and 42% of the total population. Our market shares, as I already mentioned, are very strong on the back of our very strong NPS. We have a very high penetration in the youth segment, payroll penetration around 42%, and our cash loan, 45% of our cash loans are sold remotely through our contact center and then the mobile banking. Our market shares in loans for the years of 2019-2021 grew by 12%, which is a very impressive figure considering the turmoil of COVID-19 years. We have a high market share both in mortgages, 45% plus, and then the 30% plus in non-mortgage. We are really happy that we are leading the mortgage market share, and our mortgage holders perceive us as a primary bank and have a more share of wallet with us. At the same time, we also push hard on the non-mortgage market. It is a very strategic market for us because it really helps us to penetrate regions and then acquire new customers. And this is a very important strategy for our retail business. Now, on this slide, I would like to emphasize again the composition and our structure of the portfolios in the loans and deposits. But really, what I would really want to outline is the composition of our loan book in 2019 and 2022. If you see, our non-mortgage loans have increased by 3% since 2019, which once again emphasize our strategic focus on mass retail, small ticket size, lorry loans, again, very, very important metric. And this growth, I would really say, it's indeed remarkable for us. And on that note, let's have a closer look what helps us basically to acquire new customers through the non-mortgage market. First of all, our market share in cash loans stands around 32.5%, which is 5% up since 2019. The 90% of the cash loans are automated. We have automated approvals. It takes less than 1 minute to disperse. We have around 1.2 billion of the loan book, and what is the strategic rationale behind it? It helps client acquisition, it is high-yielding lorry loan, and it, of course, generates fee and commission business. Now let's see how it translates into per customer engagement, which is definitely very, very important. We see that net interest income grew by 6% on a year-over-year basis. Our non-interest income grew by 75% on a year-over-year basis. Transactions increased as well by 70%, and our average loan ticket size by 4%. We closely monitor a very important metric, which is net retention revenue. And of course, it's not surprising that most of our revenues are generated by returning customers. This is a very essential metric that any sound business is looking at. Although most of our revenues are tied to the existing customer base, I would like to underline our ability to generate earned growth as well, which is 6% this year. Well, serving the affluent segment at TBC has always been a religion, and now we have taken it to even another level. Concept is a dedicated brand and value proposition for our upscale segment. Our customers love and enjoy the lifestyle offers that Concept is providing for them. Concept is really important segment for us. As you see from the slide, it generates the biggest part of the loan book, deposits, and revenues for our retail business. Now, let's talk about the room for improvement and if there is a room for the growth. Yes, we have high market share across all our segments. And Georgia is not a too big country, right, with too many millions in population. But does it really mean that the growth story is over? Well, if so, I wouldn't be standing here, right? And let me tell you why we believe that there is still plenty of room for the growth. If we look at our mortgage urbanization rate in Georgia, it stands around 59% versus 72% in Europe. Our average family size is 3.4 vs 2.3 in Europe, and our mortgage to GDP stands at modest 16% versus 30% in Europe. As it already was mentioned today, we have very impressive GDP growth this year, double-digit. Next year forecast, according to our chief economist, looks also very nice. And our unemployment rate is at historic low, decreased by 4% this year. So I think that there is still plenty of room for growth for the businesses in Georgia. Now let's talk about the MSME. Well, small and medium-sized enterprises is a backbone for any economy, right? Which drives the growth, help diversity, and stimulate and serve as a feeder, if you like, for other segments like corporate business and retail business. We are delighted that MSME is yet another business line that TBC has been historically #1 choice to bank with. Our market shares in loans is 30.4%, which is a leading market share on the market. We have exceptional NPS, and as I already mentioned, 70% of newly registered legal entities choose to bank with us. Our growth, if you look at the structure of our portfolio, our growth is also remarkable, right? We have double-digit growth in recent years, and one thing that I really would like to outline from this slide is again the composition of our loan book and our very strong focus on the number of active customers. Well, in MSME, we do not only have the enterprises, but we also have very small enterprises which are represented by individuals. If you look at our loan book, our micro segment have increased by 6%, so 45% from 2019 up to 51% this year, which is very remarkable for us and something that we are really proud of. We have also very good results in the per customer engagement in MSME. Businesses are growing with us, transacting more, thus stimulating fee and commission business as well. And also the net retention revenue and own growth are also helping to grow our MSME further. Now let's talk about our enablers. So clients' favorite digital channels. Digital banking has already become a dominant way of doing banking in many countries and in financial institutions, and I would try to underline that TBC is among those pioneers. As I told you, most of our customers really love and prefer to do their daily banking activities and even buy the core products from us using our digital application. We have a remarkable increase in deposits offloading up to 65% and 47% offloading in other products like consumer loans. Our penetration is also increasing on a year-over-year basis, and our DAU to MAU stands at 43%. While basically digital banking is piling its momentum, our traditional channels are also under significant changes, and for the good, I would say. In the recent years, we changed the major business processes in our branches to enable our front-facing, customer-facing employees to focus more on consulting and proactive sales. We also redesigned and changed the layouts for the most of our branches to accommodate all those business revisions. And this resulted in a fantastic results in terms of the efficiency, increased productivity, and offloading as well. Now let's talk about our payment business, and perhaps the business line which is very promising and lucrative in terms of the growth. Our payment ecosystem is widely adopted in the country and constructed in a way to serve, meet, and enable all players, starting from individuals, merchants, and third service providers, to onboard really easily and enjoy all our products. We have a wide range of products. They are sophisticated, yet very easy to onboard and use. On this slide, we can see the very strong growth rates in volumes, both in acquisition and issuing business, which once again reinforces our very positive outlook in fee and commission business. And last but not the least, again, I would really love to underline our data capabilities. Today, everyone is talking about data, right, and how valuable it is. But at TBC, we believe that it's rather important to translate this data analysis into successful use cases and help businesses generate more revenues, be more efficient. So, and as I mentioned, we already planted data scientists across all the units in our organization, and this is the result. In recent years, we generated additional 137 million in revenues in different projects. And on the last slide, I would once again reiterate our midterm guidance. We will be very strongly focused on the number of active customers, and in the medium term, we target 1.7 million in active customers in retail. We are targeting 40% of market share in our household lending, digital penetration up to 75%, and NPS around 80%. On MSME, basically the number of active customers equally applies to MSME, and we're going to increase the number of customers there as well. The automation levels in MSME now are quite high, but we basically want to stretch the envelope even further and hit the 100%. And of course, the NPS, right, is basically our Bible, and that's why we believe we're so successful, at least so far. And of course, the payment business that I underlined, maybe most promising business line. So we target to increase our active payment customers by 30% and almost double, will increase by 100% active merchants. And by this I conclude. Thank you very much.
Thank you, Toko, for a great presentation. It's really highly motivating, to present CMD in this great country, Uzbekistan, and especially in this historic city of Samarkand. And thanks for your, it's okay? Thanks for your patience. I know that especially second half of the presentations is more difficult, to pay attention, but I can tell you that I have a video in my presentation, short one, and then after my presentation we have very good 2 presentations on macro and risk management, so bear with us. I'll start with, just a second, yeah, I'll start with the brief overview of our corporate and investment banking franchise overall. I will not be exception, probably will continue Tornike's story. We are holding market-leading positions and dominating corporate business for many years already. We have 42% market share, both in deposits and in loans. And I can proudly look into our CRO's eyes. We have market-leading and best portfolio quality, also historically standing NPLs at 1.4%. If we move to the wealth management business, we have been growing it over the last decade successfully, predominantly with the deposit base, but currently we are holding both investment and deposit portfolio of our clients over 3 billion. And then I would like to also talk about TBC Capital, our investment banking arm, which is leading the capital market development in Georgia and generating 63% of DCM transactions in the country. These great achievements is enabled by 3 main pillars. One is the current-centric client model, second is our best team, and third is analytical and client management tools. And I'll talk about them briefly in my presentation. I would like to continue with the second pillar I mentioned on the previous slide, team. So we are investing a lot into client acquisition and development. This is done through the graduate programs, experienced hires, including expats, Georgians who are working and gaining experience abroad, effective succession planning, career development, coaching, and trainings which are local and international. And I'm proud to say as well that we have 280 professionals in our business who are managing a third of the bank. 30% of the managerial staff have more than 10% of experience in banking sector, and 70% of leadership position vacancies are filled with the internal hires. And now I will structure my presentation. Sorry. I will structure my presentation into two parts. One will be corporate banking, and then investment banking and wealth management. And I hope I will answer questions that Misha asked earlier during the day. Now I will check if it's working. Okay, so corporate banking. I mean, we already talked about the market leading position and growth. What I want to focus on this slide, if you look at the left-hand side, you see that we have been growing, but we have diversified our portfolio. And we see it in two dimensions. One, our largest and biggest client share, which we call strategic clients, decreased from 60% to 47%. And top 10 concentration decreased from 8.3% to 6%. On the other side, if you look at the right-hand side, we have a diversified portfolio which is represented into all sectors of Georgian economy, and this is ranging from energy, hospitality, towards retail, manufacturing, and food industry. I mean, all the sectors are covered well, and especially would like to highlight that we have sectoral coverage focus in our corporate banking, where all the teams are aligned with the sector experience and sector coverage perspective. We talked about numbers, but I would like to also focus what stands, next to numbers. The credit and lending is the backbone of corporate business, and we have been focusing on the process efficiency over the last 12 months. We are completing currently a very important project, which we are calling end-to-end credit optimization. This addresses all 4 stages of credit process, which is information gathering, project implementation, credit committee, and then actual disbursement. And as part of this improvement, we will have 32% efficiency increase in time to yes and 40% efficiency increase in time to cash. This in total generates 38,000 man-hour savings per year annual. After the lending, now I want to move towards the syndications overview. So when I talked about the diversification, the syndication works as a very important part, in this effort, because we are originating much larger and high volume transactions in the corporate segment versus what we are retaining on our corporate books. And this is done through the syndication and offloading to our partners, both local and internationals, which we are listed on the slide. Last year was another record year on syndications. We generated 27 large transactions and increased our syndications portfolio by 49%. Again, this helps us to manage the capital, manage concentration, and also add additional fee income and ROE to our business. After the credit, now I would like to move to deposits, cash management, and transactional business. The growth of this business was led by local currency deposits, which translated into increased larization. This is in line with our long-standing strategy. So larization increased from 47.5% to 57.8% over the last 2.5 years. And then that helped us also to drive and grow our non-interest income generation capacity. And we had another record year growth of 67%, growing our non-interest income from 83 million to 139 million. Then also related to transactional business and cash management, we implemented this year, new cash management solution for our clients. Now, 55 cash collection machines are spread across all major cities of Georgia and in large client premises. This enables our clients, two important components in their daily activities. One, to cash in both coins and any type of, cash notes instantly and get instant generation and crediting on their accounts immediately, same day. So that helped us, what we discussed on the previous slide, generate additional income of Lari deposits. And we have been also recognized with our strong FX capabilities. We improved the client journey, and we also have been recognized as best FX provider by Global Finance consistently over the four years. And yeah, at the last part in our section to talk about the numbers is trade finance. In trade finance, we have been historically strong, especially after the acquisition of Bank Republic in Georgia, where we captured almost half of the market in trade finance, over 2 billion portfolio. We are maintaining these strengths, we're growing this business, and have been recognized, as my colleague said, by all major magazines and surveyors. Another important addition which we put into this business line was new factoring platform. This is fully digital proposition which enables our clients to execute and originate transactions paperless. This increased number of transactions in factoring 3 times already, and hopefully we'll have even better numbers by year end. And now promised video about the digital capabilities and analytics in our business.
Introducing the Corporate Client Management and Analytical Tool. Client-centric approach is key to our success. The tool provides a full-scale view on each client based on industry benchmarks. Transparency and instant availability of the information enables efficient management of clients' profitability. Relationship managers instantly identify solutions tailored to clients' needs. As a result, corporate client receives timely and high-quality service. The project generates additional banking income. Employees spend less time on routine tasks that make them more productive and happier. The project is fully in line with our mission: make people's lives easier.
Okay, now I will continue second part with wealth management, investment banking, and we'll start with the wealth management. So if you look at the wealth management business, we have also here market-leading positions, have been growing our books by 25% CAGR over the last 3 years, and then 19% year on year. But what I would like to stress here and ask for the attention of Misha is increase of the share of alternative investment solutions in our portfolio. So indeed, our clients currently are in demand of alternative solutions, taking different type of risks and generating different structures of the income. And we already are hitting 20% of share of investment portfolios in our total assets under management book. This is on the back of the strong growth of 60%, 67% year on year versus deposit growth of 13%. All this, as you know, investment products are generating additional fee income. They translate it into the both number of client growth. It increased by 20% over the last 2.5 years, and also to additional profitability of our customers. So as you see, the income per customer year on year increased by 73%. And again, I won't be missing, the recognitions consistently that we are receiving from Global Finance, from the banker, as being the best private banking provider in Georgia. Now I will move to the asset management, and this is the new vehicle that we founded this year. Some of you may know that Georgia established new law on funds 2 years ago. We started working on the license acquisition from the MBG, which was successfully completed in the end of 2022. And as I mentioned, we launched first asset management fund in Georgia in the beginning of this year. We are growing the fund. It currently stands at this $6 million size. We will be doubling within the next 3 to 4 months the size of this portfolio. What does it provide to our clients? clients. It's an opportunity to further diversify the investments and invest in the secured Georgian corporate loans. A diversified structure, 9+ industries where you can generate, we are showing here 6.5% net realized yields, but considering the rate hikes, this will increase to 8 to 9% over the next, before the end of this year. What I would like to stress as well is that we had interest not only from the Georgians, but even more interest from our international wealth management non-resident clients. And as you see, 72% of fund investors are international, whilst 28% are locals. And then we would like to look at the brokerage business. I mean, this is more for us additional add value service to our wealth management and affluent clients in concept business. We have been working on this effort, with a different platform, but this year we updated it. Now we have a new brokerage platform proposition which enables our clients to both invest and trade and monitor their portfolio of worldwide stocks. And I'm proud to say again that the number of clients, since the launch of this platform tripled, and amount of assets under management increased by 82%. We are having more ambitious plans for the next year, not only on the affluent and VM segment, but also on the retail, which we will be presenting on new updates. And then the actual, capital markets, I briefly mentioned in the beginning, but if we look at these figures and what Mr. Kobagwenetaza presented, indeed, the capital markets in Georgia holds a smaller portion, much smaller portion than other developed markets in the financial sector. It's growing fast, but it's still very small. I mean, we tripled the market together with other market participants over the last 2.5 years, and generated, like 9.2 million new DCM deals, which enables both, corporates to attract additional and alternative financing measures, but also our both institutionals and local individual clients to have additional investment opportunities. But there is still a huge way to go to reach the milestone that we are targeting to have a substantial impact on the financial markets in Georgia. And last part, what I want to present is our research, which has been growing impressively over the last 3 years. We positioned the research unit of TBC Capital as a strategic enabler for our clients to plan their business and to make strategic or tactical decisions. And I'm proud to show you that in terms of coverage, we increased not only the number of the reports that we're publishing annually, but also we added new areas such as new industries within the Georgia and also global market watch, both in DCM and fixed income and equity markets. We're also proud to say that we have been named as a best macro forecaster by National Bank of Georgia in 2021, and you will feel it when Otar will present his presentation today. To conclude, I also want to summarize key targets. We believe that we are well positioned to maintain our leadership position with a 40+% market share. We would like to drive further share of investment portfolio growth and have it at a 30% in total assets under management, and have great customer experience with 75% NPS. Thank you. And now I would like to invite one and only Nino Masurashvili, our Chief Risk Officer. Please.
Thank you, Goga. Now it's finally my part to talk about not that fascinating and shining thing that our business leaders talked about already, but very important part of my presentation is about the risks. So the type of risk we have, how we manage them, and what are our achievements. To start with, I would like to emphasize that our risk profile is very strong. We have very successfully overcome challenges related to the COVID pandemic recently, and this is the results of our very prudent underwriting standards with very strong NPL, debt, LTV, debt service, PTI ratios, and FX buffers we maintain for our FX-denominated portfolio. As you can see, our NPL ratio is 2.3, and cost of risk in the third quarter was 1%, back to our normalized level. Also, it's important to highlight that in consumer lending, where we have automated decisions, we have a lot of scorecards for multiple products, which is coupled with very robust validation system. It is essential to have this type of result, what we're showing in this slide. Our capital liquidity is also very strong. We were using multiple stress testing tools to be aware and measure potential impact that we have, and the buffers we have for both capital and liquidity is enough in order to overcome potential challenges we may face. Very important is our recovery plan. We have been working on our recovery plan for several years, and we have agreed and defined different recovery options in a case the bank can face some extreme stresses. To talk about our risk strategy, we have built our risk strategy on 4 different pillars, which is have and build sophisticated tools in order to safeguard our bank from potential risks we are facing all the time, digitize processes in order to improve customer experience, have quick decisions, mitigate the operational risk, and of course be cost effective. Very important third pillar is to embed in our everyday life, in our decision making, risk-aware decisions. And the fourth would be partner with the businesses in order to facilitate risk and return decisions. We're recently working hard on these type of projects, and I think have very good results. To speak our risk management framework, I would like to emphasize that this framework is used across the whole group, both in the Georgian and Uzbek operations and the markets, and in all our subsidiaries. So it's like for overall risk management and not only for the Georgia. Very important part of our framework is, of course, risk appetite document. At board level, we have discussed a lot the appetite and limits to set for different risks, and this is cascaded down to all our subsidiaries. This is an important part to have a good measurement system in order to monitor the risk which can be elevated and have a quick decisions. Internal capital and liquidity annual process is also in place in order to have adequate capital liquidity. And once again, our recovery plan, it is reviewed on an annual basis to have updated recovery options in case of severe stresses. And very important part, people, Vakhtang already talked about that, but I will also mention that thinking about how to develop and train people, how to get the talent is very important in order to further improve our businesses and have a better expertise. Now the couple of slides are showing our different risk profile. I will cover all of them. So here we see how our portfolio is diversified between our segments, which is retail, MSM, and corporate, and it is stable across the year. There is no big movements. The portfolio is also well diversified between the different industries. We have set sector limits in order to proactively manage sector concentration risk. So here you see that it is very diversified. Top 20 borrowers and top 20 borrowers, Goga also mentioned, it's decreasing over the year, and we do not have risk and concentration risk here. And the very important part everyone is mentioning, the governor also mentioned about that, so this is a FX denominated share in portfolios, buys in loans and deposit. I would like to say that the figure of lari share, lari portion is increasing on an annual basis. And what is very important, so how we manage that proactively. We do have a target where we want to get, and those targets are then cascaded down to the businesses, and we work with the businesses on a monthly basis to have a different actions how to get there. So here we see on the bottom slide that, for example, in a retail, in a loan portfolio, GEL share, local currency share, 62%, which is already very good. And in a deposit side, businesses have a larger share of a GEL portfolio. So it's increasing. We do have a target. We pay a lot of attention to that. So it cannot be achieved on a very quickly, but overall, we have a very good trend and continue to manage that. NPL and cost of risk, I already talked about that. So we are back to our pre-pandemic level of 2.3, and NPL coverage is also very strong. And 70% of our portfolio is collateralized, and this ratio is also stable across the different years. I already talked about the financial risks and different financial ratios, and now I would like to talk a little bit about the non-financial risk, which is also very important for our group, and it needs very good management. So we go one by one very quickly. So the cyber risk, this is something that we have that is elevated globally, in the country Georgia as well, a little bit less in Uzbekistan, but probably it will come as the banking and everything is being developed. So here we have our in-depth security strategy with multiple preventive and detective controls, which help us to manage this risk. And we have not historically had any material breach in this regard. So this is very good that we are here, but we're continuing to improving everything related to this topic. Operational risk, it has many different topics, but we have very rigorous process of identification, measuring, and that mitigated the operational risk, and we are working with the businesses to mitigate our operational risk. Reputational risk, of course, we have a zero tolerance to somehow damage our brand image. Compliance and regulatory, we have a central function of monitoring the compliance, so to be aware that to make sure that we're in compliance. Financial risks, obviously, there is a zero tolerance toward that, and we have multiple controls in order to make sure that we are fine in that regard. And model risks, as you know, and Tornika was also mentioning, there is quite a huge share of the non-collateralized cash loans. There we are using our different scorecard, and in order to control model risk, we have a very robust model validation and a monitoring system in order to have a awareness what our models are doing. And finally, very important part, people risk. Of course, we are doing a lot of automation and digitalization in order to be less dependent on operations people, but we are very heavily dependent on our talented people in order to grow and develop our business. So that's why our lead of HR, Guanzo, together with our management team, really focusing significantly on different aspects of human capital management. In the start of my presentation, I have said that digitalization is one of our pillars. We have achieved a lot in this direction, and I would like to just mention several projects that we have. So first is like in the cash lending end-to-end digital process. It is absolutely important, as said, because it's increased customer experience with the quick decisions, but at the same time mitigates operational risk because it avoids the mistakes, etc. Our ratio in the Georgian operations here is 95% automation level, and Uzbekistan is 100% digital. So this is a really very good result. We have talked about the data, so everyone has mentioned that, and of course smart usage of data is very important to have smart decisions, and we have deployed those data in fraud management. Recently it has been elevated a little bit, so we have used data coupled with AI tools in order to identify what can be the fraudulent transactions, and we had also very good results. And we also have used the data in IML, and there we have also very good results. In a risk, we have a so-called risk IT tribe, which is absolutely important for us to further develop IT systems which is related to the risk. And the last but very important part, we are heavily working to increase our expertise in IT of our risk people, because it makes less dependent on the IT specialists, and the risk people themselves can do many things if they have that capability and expertise, so we're focusing on that as well. Probably the Russian-Ukrainian war is also something very important to give you information, so what is the impact? When the war has started, of course, we were very worried, because you can imagine how we can have done different stress tests, and we're fearing that it may have an impact on TBC Bank and the Georgian financial sector. However, after several months, we have saw that vulnerable portfolio is really very low, around 10 million Georgian lari. We have a few clients in our book who is dependent individuals who are dependent on Russian, Ukrainian, and Belarus income. And for the businesses, initially there were challenges, but very quickly they have managed to adjust and to change and switch to the new supply chain. So it has been overcome, and now I would say in a business as usual situation, we do not have any significant vulnerabilities in our portfolio. As for the sanction, because this war brought a lot of sanctions, so as you probably know, the Georgian financial system follows UK, US, and EU sanctions, as obviously we have a zero tolerance toward the sanction evasion. And in the bank, we have increased the number of people who are overlooking this function, strengthens our onboarding and monitoring system. So we're really doing hard to be in line of this sanction and don't have any challenges regarding that. Now the second two slides shows some information regarding our Uzbekistan business. You know, as Nika already said, that one of the major business processes in Uzbekistan is its consumer lending. And as already said, on a monthly basis, we're receiving up to 300 applications, and it's all digital. We have deployed some fraud management system, and we have a measure, and this system helped us to avoid around 1% of possible loss, which is related to the fraud. The team is continuing to fine-tune the system in order to even better. Because we have a different data, our approval rate is 43%, which is a very good compared to Georgia as well. And time to cash is only 7 minutes, because obviously it's all digital and it's very easy for the customers to get the loans. Very important, Nika told that there is around 150,000 loans. It means that there is many things to be done in a soft collection as well. That's why that part is also very much automated in order to make quick decisions and be cost effective at the same time when continuing to work in this direction as well. So as a result, our loan book is, by the end of September, is around 300 million with NPL of 2.7%, and the cost of risk in a third quarter was around 7%. The last but not least of the important, this slide, so this is a ESG. We are very proud to say that we have built very solid ESG framework where we have very strong governance. We'll also have committees both on the board and the management level. We have a very ambitious targets. One of the targets is to reach 1 billion of sustainable portfolio by the end of the next year and increase it from the 700 million. Another very important part is share of the engagement of the women in the executive positions. So currently our ratio is already high, 37% of all managerial positions are held by the women. However, we want to further increase it up to 40%. We have multiple very good and solid ESG ratings, and my favorite is that one, ranked #1 in the banking sector in FTSE 2050, according to the women. So it's to be #1 is something to be really proud of. So that's it, and to summarize my presentation, I would like to once again reiterate my messages, which is we really have an expertise and capacity to identify, manage the risk across our group and manage them across our risk management framework. Our asset quality is strong. We have enough capital, liquidity, and we have tools to constantly examine that. And finally, in order to improve risk management, we're trying to bring best practices both in Georgia and Uzbekistan, and we are paying a lot of attention to people development because these people who are bringing all the results. Thank you, and now I would like to ask our Chief Economist, Dr. Nadaraya, to talk about the macro environment.
Thank you very much. Thank you very much, Nino. So, I know I should be quick, but at the same time, I really hope to deliver and to focus really on something new for you, at least what you don't often see in other macro-style presentations and reports for Georgia and Uzbekistan. So, growth. We can't avoid growth. So all of us know, Uzbekistan's strong growth and resilience. Again, strong growth and resilience at the same time. But the question is, why really is that? And the country depending still to a large extent on commodities. And the answer is because the prices of those commodities are not correlated with each other. And that's why even in the pandemic, Uzbekistan, unlike many other countries, showed slightly but still positive growth. Now Georgia, of course, like many other countries, hit was hard during the pandemic, but really followed by what BlackRock would call restart rather than recovery, and restart continues for the second year now in 2022. We have slightly lower projection for 23, predominantly on the back of the very high base effect, but then we are now working on the Georgia's trend growth model, which we used to believe is something like 5.5%, but we may revise soon it up to 6% or even slightly higher on the back of strong inflow of highly productive, in IT industry, highly productive migrants, as you know. So now, to continue with resilience, we are living really, unfortunately, in very turbulent times. And as you can see, the dotted or call it dashed lines, gold prices up and down, oil prices up and down. But the solid lines are terms of trade for Uzbekistan and Georgia. And as you know, terms of trade is export prices over import prices. And for the economies, like developing economies, but not only, like if you look at euro area, the terms of trade are really volatile, but not in case of Georgia and Uzbekistan. And if you compare with other countries, that's really the value. Now let's think of Georgia and Uzbekistan together. So if you wish to invest in Georgia and in Uzbekistan, as you know, largest industry in Georgia is tourism industry, and largest industry in Uzbekistan is the gold industry. And if you look at tourism industry, this is worldwide, so international tourism expenditures worldwide, and the gold prices, so those are not really correlated with each other. Yes, so basically that means that investing in both countries is a diversification, really. So reforms, all of us know about reforms now, especially in Uzbekistan, and we copied some wording earlier on Georgia, and now basically almost same wording on Uzbekistan. And also what I would like to say is that what really also distinguishes Uzbekistan is very high investment to GDP ratio. Of course, productivity also matters, definitely, and the labor force, but high investment to GDP ratio is a precondition for strong growth. And looking in the past enables us to argue that in Uzbekistan those investments should be productive because, again, still dependence on commodities is substantial, but we really see the emergence of the new industries, yes, the new industries, whether it is manufacturing, et cetera, new services, and that really, that's really, I think, important to mention. Now, housing market, very important, of course, to assess the health of housing market. We have separate assessments in our publications. Goga already mentioned on TBC Capital publications. We also have some assessments for the housing bubbles in Georgia, also in Uzbekistan. And definitely, you don't want to invest in the country with overvalued housing prices like it's in Canada and many other places recently. And that's not the case in Uzbekistan. Also, as you can see from those charts, if you look at GDP per capita level and the benchmark housing price in the capital, there is very strong upside in Georgia as well as in Uzbekistan. And of course, yields are solid. And of course, over time you have decreasing yields. So now exchange rate, like housing market, you don't want to invest in the country with overvalued exchange rate. And you don't have all framework here. So for those of you who are familiar, so it's basically based on standard Balassa-Samuelson approach, the long-term trend of the real exchange rate. And based on our assessment, the gel seems to be fairly valued or maybe slightly undervalued, even at very recent exchange rate. So if you assume USD gel at 2.75, but the sum is clearly heavily undervalued. Yes, and of course all of us understand the benefits of entering country with really undervalued currency. So to be brief, in short, that means stronger growth in dollar terms going forward. Now, inflation, unfortunately, inflation is an issue worldwide, and our baseline projection is that it should normalize in Georgia as well as in Uzbekistan. You know, Uzbekistan now has an ambition to join the club of inflation targeters, and that's of course good to hear. Now, dollarization, I think Nino already mentioned that together with strong and proven track record of risk management, also regarding the foreign currency risk, we are quite successfully increasing the lari share of portfolio, but also here, very fundamental question is what should be our final target? So in terms of larization, should it be 100%? So probably no, because there is a fancy term used by IMF, so-called natural level of dollarization. So that means basically, as you can see from those charts, the inflows to GDP is quite high in Georgia as well as in Uzbekistan. So the local currency share in portfolio should not really be 100%. Based on our estimates, around 30% in Georgian case should be seen as a natural level of dollarization. I would say maybe slightly lower in case of Uzbekistan. So another, I would say, maybe one of the most powerful, really powerful indicators, early warning indicators, is the credit to GDP gap. We have seen positive gaps, so credit increasing more than the trend in many countries for the many years, and then you know what happened. I mean, Greece could be the best example. In our case, so those are our estimates for Georgia and for Uzbekistan, and in Georgia, the gap even turned negative now. And in Uzbekistan, it's very close to zero. So that also is very important from so what you would call the macro level investment decision making. And by the way, also you see here the trend implied growth rates for Georgia and Uzbekistan. And in Uzbekistan, as it was highlighted in the previous slides, so it assumes a normalization of inflation. Yes. Okay. So now the even stronger, of course, Nika also mentioned, Tornika mentioned, even stronger upside, especially in Uzbekistan in the retail segment. So one thing I want to say before we look at the first chart. So penetration is a very important thing to look at and study. So first of all, in really good macro-financial literature, whether it is from IMF or from Basel Committee, so what matters is really the change in penetration level rather than the level itself, yes? This is very important. Second, very important how you measure the penetration. So the simple thing is to use credit to GDP, but in case of households, that's often the missing indicator. Why? So think of Georgia, the household disposable income to GDP level in Georgia is one of the highest among other countries. Why? First, remittances. So remittances are not directly included in GDP, but certainly they are part of, those type of inflows are part of household disposable income, or think of pension contribution, like in Singapore, it can be around 30–40% of household disposable income. You know, taxation also, like in countries like Mongolia, very high share of commodities and large companies where the disposable income goes to first of all to them. Of course, social redistribution then, of course, is important. So from that perspective, here you have the chart, household debt to household income. Of course, as Tornika mentioned, still strong growth potential in Georgia, but especially, of course, especially for Uzbekistan. So the second chart is mortgage to non-mortgage ratio, and this is basically, mortgage to non-mortgage ratio and GDP per capita. So of course, as you are richer, you have more mortgages. Georgia is close to trend. In Uzbekistan, what we can see from this chart, there is, again, from this chart, there is stronger upside for consumer lending, again, if you compare with mortgages. So thank you very much. You can find more, as Goga mentioned, on our TBC Capital website, including publications on Uzbekistan, and we are going to do more also in this regard. Thank you very much.
Thank you. Now we are at the last part of our session. I would like to ask all presenters to come to the stage, and we will have our final Q&A session. So again, please, as a reminder, if you have any question, please raise your hand, and we will provide you with a microphone. The online participants can submit their questions via our online chat, and I will read them out.
I have one question. When is the dinner?
In this case, just final words. We have some presents prepared for you, so please pick up one on your way. And also, please make sure that you come to our dinner tonight at Platan Restaurant. The individual emails has been sent out, but just to remind you here as well, we have a dinner at 8 o'clock at Platan Restaurant. Those of you who are staying here at Silk Road Samarkand, the transfer will be provided at 7:30 from the Amir Timur Hotel. Thank you.